Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. My guest today is Mike Venuto, Chief Investment Officer at Tidal Financial Group. Tidal is a leading white label ETF issuer. We're talking about ETF industry trends and the post-election outlook. Mike, welcome. Great to have you with us today.
Neena, thank you for having me. I'm excited to talk about everything, all this amazing growth in the ETF industry.
Sure. So I read on your website that Tidal manages over $22 billion in ETF assets across 178 funds, supporting 64 sponsors and issuers. Very impressive. So some of our listeners would like to know, what does a white label ETF issuer do? So tell us a little bit about Tidal and about the role that Tidal plays in bringing these ETFs to market.
Okay, so it's funny. We're growing so fast that we've gone from that 22 when you looked at it the other day to 25 billion. So it's great for our clients. The term issuer, we like to think of it as a platform, right? Because there are no ETFs with the name Tidal on them, right? They're all our clients' ETFs. So what Tidal does is we're a platform that helps people launch, manage, and grow their ETFs. And we meet the client where they are. Like if they have a good idea, we work with them to develop it into an ETF. Then they use all of our infrastructure to get it out there, but the end product is in their brand. Before doing this platform, my partners and I worked at various different issuers. We saw lots of things that worked, lots of things that didn't. We made lots of mistakes. We made lots of successes. And now we take all of that knowledge and experience and help others build their businesses. So we've helped companies like SoFi or Rockefeller or Newfound Research or Cambria. We act as the back office and take all the headaches. One of my partners likes to say, we're in the headache business. And it's our client's role to help take that idea and bring it to market.
Awesome. Now let's talk about some of the recent industry trends. And it's been a blockbuster year for the ETF industry. So US listed ETF assets surpass the $10 trillion mark for the first time in September. And we are on track for record inflows exceeding $1 trillion and a record number of launches as well. And another significant milestone this year was the launch of the first ever spot Bitcoin ETFs. And they have been immensely popular. They came after a wait of more than a decade. So I was interested in your thoughts on what's driving the growth in the ETF industry and what impressed you the most.
Yeah, I mean, obviously there's, a lot of charts out there, and you can see that out of the top 25 new ETFs, about half of them, maybe a little more, are somehow linked to Bitcoin or crypto. Whether it's, a spot Bitcoin ETFs from Bitwise or VanEck or whatever, or a lot of these ETFs that have been built around MicroStrategy or Coinbase, right? So one of our clients, Defiance, they just had a fund go to $1 billion. It's a levered version of MicroStrategy, MSTX. We have another client, YieldMax, that does a buy right strategy using MicroStrategy to give a high yield. MSTY, they did the same with Coinbase, CONY. So there's definitely been not just a boom from crypto, but a boom from crypto adjacent names as well, right? It's a lot of excitement there. What I've seen this year that's made me so excited is the breadth, right? Meaning it's not all just passive anymore, right? We started the year right around 11 billion. We've more than doubled. And it's not in just the boring beta, right? That stuff's still getting the assets but people are interested in more active and more complex products. So, we've done a managed futures project with Meb from Cambria, partnering with Jerry Parker. We've done return stacking. We've done all kinds of new complex things that just weren't even thought about a couple years ago, and they're immediately getting a bid. They're immediately hitting the zeitgeist. We're able to actually listen to the client out there and bring them the products that they're looking for.
Excellent. So we just had an election here, and Trump's major victory has sparked impressive rallies in US stocks and other risk assets because investors hope that lower taxes and reduced regulations will benefit the economy, and they have just piled into risk on ETFs. ETF flows have accelerated after the election. But what do you think a Trump presidency would mean for the market and the ETF industry?
So the ETF industry has experienced some great regulation, and it came from the last two administrations. So there was things during Jay Clayton's time under Trump that were good, and there were things under Gensler and Biden that were good, both for the ETF industry. We had the ETF rule that changed a lot of things and made things easier to do. We had the derivatives rule, which brought about leverage and single stocks and all these things. And so we've had a really nice run of it. So in terms of regulation for the ETF industry, I doubt we're going to see anything that's really meaningful right now. That's going to change things, right? Because we've already gotten almost everything we wanted. Now, what's left people are asking for? They're asking for the share class thing. I think that'll happen, probably take 2-3 years. The share class thing is essentially allowing people that have a mutual fund to list an ETF that's a share class of the mutual fund. Vanguard's been allowed to do it forever. Their patent expired. 35 companies have requested permission to do it, including Tidal. We want to be able to have that service for those who come to our platform. I think it'll take a little bit of time, and probably will happen. Now, that's been great for ETFs. Crypto, on the other hand, Bitcoin has been doing great despite terrible regulation, or not even terrible regulation, lack of regulation. They've been governing through force instead of by making clear rules. There have been quite a bit of political donations to this particular year coming from corporate crypto companies, Coinbase, Ripple. Supposedly they were almost half the donations, or I guess, about almost half the corporate donations came from crypto. It didn't all go to Republican, but it went to crypto-friendly people, or at least we'll call them crypto curious. I do think that we'll see regulation there that will impact the ETF industry because it'll allow us to do more things with that community. And it might even spark the beginning of tokenization for real. Right? One of the first ETFs that we did through this platform was Block. And in the idea of doing Block, which was the first blockchain ETF that we did actively, we did that because we were worried about what tokenization could eventually do to offset the ETF industry. So we've always tried to stay way ahead of things. For the markets, well, we've already seen it, right? They keep saying this word, animal spirits. I keep hearing that over and over on the various news sources. I don't think it's all going to be roses. There's going to be a lot of controversial decisions. I do think that you'll have some volatility, but it's most likely when you pour fuel on the fire, it burns hotter, and that's the plan. At least that's what's been forecasted. I do think some of that will result in inflationary situations, and that'll also allow people to be diversified and not just own NVIDIA, which has been the trade for the last 4 years.
Right. So do you think we'll get Dogecoin and Solana and Ripple ETFs in 2025?
I don't think it'll be in 2025.
Okay.
Each one of those would have to be a 33 Act ETF,
Mhm.
which requires a 19B4, which requires 40 days of going back and forth. It's possible in 2026. I think Solana would probably be the most likely next one. Because there's a lot of cleanliness to it in terms of the structure and what it is. I think Dogecoin. I have a history with Dogecoin. I loved it, and it's done some good things for me. But I don't know how to call it something that is fiduciary to own. Right? I don't know which law would allow us to get that into an ETF. It's if you want to own Dogecoin, it's very easy to go do it. Why should it belong in a regulated investment vehicle?
What about the share class approval? Do you think we will get the approval next year, or we have to wait for? Okay.
I would say 26, 27.
Okay. So let's talk a little bit more about active strategies that have been very popular. And you said that it's not only boring beta that is popular now. And in fact, the majority of new ETFs that are being launched now, they are actively managed. But these are not traditional stock picking strategies. Most of these used derivative-based strategies. And you talked a little bit about the ETF rule and the derivative rule. So I would love for you to weigh in on the rise of active ETFs, and particularly these options enhanced ETFs.
Yes. So the rules that were changed have allowed us to do things that people have wanted to do for a very long time, right? I've first heard about single stock ETFs way back in like 2009. I remember, I think Greg King was trying to do them way back then. Now with the derivatives rule and with the 6C11 or the ETF rule, it's possible. Now, it's not perfect, though, right? So it takes a lot of active management to do, right? We have the entire Yield Max suite. We have the Defiance partners doing their covered call strategies using single day options. We have a client doing a wheel strategy, the ticker wheel, WEEL. We have a client doing a put right strategy. I mean, it's everywhere now, right? And investors are interested in it because you're able to change the outcome, right? It's not just, hey, let's do a buy right. It's let's do a buy right with a target. Let's do a buy right with shorting, right? So like we have both sides of the trade sometimes. So, we have the ticker TSLY, which is selling options against Tesla and giving you a nice yield. But you have a long bias towards Tesla in that fund, right? Because we're synthetically long Tesla. Then we have Crash, CRSH, which has got a short bias, right? It's essentially shorting Tesla, but doing the same things to generate the yield. So allowing people the choice of how to approach it. This is so different than traditional active management. This is active execution, right? You know what the strategy is going to be, but it requires, a team of options gurus that we work with to trade this and make the decisions on which strikes. And this is an enormous amount of work, right? And I think that's why the public has come to this. Is a lot of them were trying to do this. They were overpaying for the options because it's hard to get these things. You have to get institutional accounts, and they're trying to do it themselves. It's less tax efficient when they do it themselves, and we just packaged it for them with our clients and handed them the solutions. I think it's democratization of things that historically only hedge funds could do, or people with substantial assets and time could do. Now they can just buy a share.
Right. So yeah, ETF providers continue to push the envelope of innovation, and I love that. ETF wrapper is just more convenient, more cost effective, more tax efficient. And we do understand that some of these ETFs are not suitable for some investors, so that is why education is important. And we as ETF educators try to make sure that investors know what they are buying and how to use those products. In fact, even fund managers, I would say they have done a commendable job explaining their strategies. So we always tell investors, please educate yourself before investing. Read the fact sheet and the prospectuses before you decide to invest. Now, I was
Yes.
looking
Very much so. And like we have some partners that do leverage on single stocks. Those are not meant to be held more than a day, sometimes not more than an hour, but they're a tool. And if there was one place where I would love to see regulation change, it would be on our ability to talk to the public about these things. Right now, it's like the laws are antiquated that cover our ability to educate or say things about our products because everything is seen as marketing material. Sometimes you're just explaining how a buy right works. And, everything I'm saying here today, I can say freely to somebody in the press. But if I tried to write it down and send it, it's now marketing material. I don't understand why we can't get those regulations to a place where education can come from people in the industry. It's very much hands tied right now.
I totally agree with you. We definitely need a change in those rules, and hopefully we'll get the new rules soon. So I looked at your website, and you have helped bring so many very interesting, very innovative products to market. So I was just interested in which of these particularly new launches you're most proud of.
Okay. So I do appreciate that you shared this with me ahead of time because I actually had to think about this one, right? Because they're all our clients' funds, right? And I get so excited about so many things that we've seen this year. So I'm going to hit a couple of highlights for this year. Number one just happened, right? So Thomas Lee and Steve Quinn came to us with their granny shots idea. I have never seen an ETF grab this much assets so quickly, and it's amazing to me. And I think it surprised them how quickly people went to this because it's not hot sauce. It's not 2x something. It's real investment thesis and real active management. And people are gravitating to it quickly. Super excited about that one. We did our first 351 exchanges this year. So we did 2 for Rockefeller Asset Management, which in combined was like 1.4 billion, and help with the taxes and do all the right things there. Super proud of our team and Allie, who's our head of launches, for everything she did with that. I love MFUT this year, which is MFUT, which was 2 of our clients, and we got them to collaborate and build a managed futures product, which Jerry Parker and Meb Faber. I love that another 2 of my clients collaborated to do Bitcoin and gold. So the Resolve Newfound team has done the return stacking. They're working with another client of ours, Quantify Chaos. They did the first asset stacked fund, and there's a lot more to come, but it's essentially BTGD, which is Bitcoin and gold. So $1 gets you $1 of gold and $1 of Bitcoin. So it's a form of leverage, but it doesn't decay the same way because of the 2 assets. Our clients at YieldMax this year, we launched the first fund of funds for YieldMax. So we have 30 plus single name YieldMaxes, and now we have a feeder to help seed them in YMax, which is also diversified and more of an advisor product. And I just love how all of this has come together. And then I am super, super excited about something that we're launching next week. It's already effective, so I can talk a little bit about it. We are launching ETFs next week. Well, it might be next week by the time this airs. So we're on the 19th, we are launching ETFs that are focused on the FIRE community. FIRE community is a group of do-it-yourself investors and savers that believe in financial independence and retiring early. It's an amazing group of people. We're launching these ETFs with no management fee, and we're filling the ETFs with ETFs from the Tidal platform. So it's both a way for us to help people on the Tidal platform and engage with this FIRE community. And because it's designed around that, it helps me solve that education thing, which is because I'm going to be talking about the FIRE ETFs, I can start to talk more about actual financial education because I have a product link to it. So I know you asked for one thing I'm excited about, but it's so much going on.
Yeah, all very interesting and very innovative strategies. And you mentioned 351 exchange, and some of our listeners may not be familiar with that strategy. So could you talk a little bit about that exchange?
351 exchanges have been around forever. They've historically been done with mutual funds, but now people are starting to do them with ETFs. There's probably been 10 or 15 of them. A company called Syntax has done some. Wes at Alpha or ETF Architects done some. We've done some. MEB is working on one. But essentially, you take a diversified portfolio of appreciated assets. Let's say it's $200 million worth of stocks, right? And you only paid $50 million for it. Without doing a taxable event, you're able to convert that into shares of a new ETF. There's like 15 other caveats, like little fine print that you have to do, but it's all in the tax code. And you're going to need a lawyer to help you get through it. And you're going to need an experienced team like ours who can walk you through all the right processes. So now you've taken high-priced stock that you have a low-cost basis on. You've stuck it into an ETF. The ETF's you still have that cost basis of 50 million on the 200, but you now own a diversified portfolio of ETF stocks that can work off the gains inside there and essentially allows you to defer realizing the gain until you sell the ETF, because the ETF's not going to distribute gains because we use custom and combined baskets to do all the trades. You're essentially going from an inefficient vehicle to an efficient vehicle for taxes.
Yeah, that's the beauty of the ETF structure. And I'm sure we'll see more of such products in the coming months and years. Now, let's talk about some of your ETFs that haven't yet launched, but have already generated some buzz in the media.
Yeah.
You filed for eight. You filed for 8 two-stock ETFs. So these would go long one stock and short the other. For example, one of these ETFs will go long NVIDIA stock and short Intel stock. And then there's this filing for a leverage Berkshire ETF. And this is interesting because Buffett once called derivatives financial weapons of mass destruction. Talk a little bit about these ETFs, these filings.
Yeah, so because these have been filed, there's very little I can say. It's basically I'm supposed to like read from the prospectus. So Battle Shares, our client Battle Shares, is, as the prospectus says, is setting it up for pairs trades, right? And these pairs trades have been done by people all along, right? It's nothing new. It's stuff that hedge funds and active traders do all the time. We're just democratizing access, right? So, if somebody wants to be long MicroStrategy and short JP Morgan, we're going to give that to them in a package, the same way we've done with all these other things that our clients have come up with. The other one, the client is actually a Korean, and they wanted I think it's called Kiwoom. They want to leverage Berkshire. They think that their constituents want that. That's fine. It doesn't have to make Warren happy, right? It's got no affiliation to him. Once you're out there in the public, people can do things with derivatives around your products. It's just the way it is.
So let's talk a little bit about political investing now. And Tidal is sub-advisor to NANC and KRUZ ETFs. So these are very interesting tickers, first of all. And then these ETFs, they invest in stocks which are bought and sold by both sides of Congress. So have you seen any traction these funds have been getting leading up to and following the election?
This one is sponsored by a company called Subversive, and they have a partnership with Unusual Whales. And Unusual Whales essentially provides the data that that comes from the Stock Act to our portfolio managers to help structure a fund that is essentially the inside information that Congress is allowed to use, right? It's kind of, I can't believe I'm saying that, but that's the truth. So me as an investment professional, if I have inside information, I cannot act on it. I will go to jail. Even Martha Stewart can't act on it. She will go to jail and did go to jail. But Nancy Pelosi can. And all she has to do is disclose what she did. And we get that data and we turn it into portfolios. So Nancy is the larger one at the moment. I think probably because there's all the memes of her being so good at it. But it's not just her that we are following. That fund is a little more tilted towards tech and was outperforming and had more assets than the Republican one, which is called KRUZ. The day after the election, KRUZ went up more than Nancy, had more volume, and got more assets. So I do see a little bit of shift there. And we have filed to also allow these to include Bitcoin exposure, because that's become a big part of one side of the tape's investment philosophy. So we'll see when the regulators allow us to do that. But it's been very interesting to see. One thing that surprised me was in the Republican one, they have never bought Tesla. Marjorie Taylor Greene bought Tesla the day before the election. So we actually added Tesla to the KRUZ one recently.
Very interesting strategies. So I was looking at the top holdings. So NVIDIA is the top holding in the NANC ETF. It accounts for more than 13% of the portfolio. So no wonder NANC has done quite well. It is up more than 31% year to date. KRUZ, on the other hand, is up a little less than 20%. So you also help fund providers in converting their mutual funds into ETFs. And we have seen that because of the general preference for ETFs among investors, many fund providers have been converting their mutual funds into ETFs, or they have been launching ETF clones of their successful mutual funds as well. So per my understanding, more than 120 mutual funds have been converted into ETFs so far. So I was interested in what you have learned so far from these conversions, and do you expect this trend to accelerate in the coming years?
I don't think it's going to slow down. I think people have found very little success in this. So, DFA, a success. JP Morgan, a success. Pretty much everybody else, not too exciting. There's not like, hey, we converted and we got a bunch of assets. And I think the reason is most of the mutual fund assets tend to be held either on 401k platforms or at wirehouses where they have an incentive fee to get people to invest in them, right? That's paid to a broker to get you to buy them. And you have to be super, super careful about which ones you convert, right? If you're an ETF that's a mutual fund that's primarily owned by 401k investors, don't convert. It's a mistake. If you're an ETF that is primarily owned in shares that have a load, converting means you're going to lose a bunch of assets. And we saw that with many of these. If you're an ETF, a mutual fund that has no load and has been bought directly at Fidelity or Interactive Brokers and places like that, like DFA has, yeah, converting works, right? Because it's the same audience, better structure. Perfect. JP Morgan sold mostly to JP Morgan clients. Convert, no problem. They're not going to lose things. Real interesting one, right? So SPY was the first ETF ever launched, right, in the US. But Eaton Vance has an ETF now that has an inception date in 1984 because it was a mutual fund and they converted it. So the ETF with the oldest inception date is actually from Eaton Vance. So
Very interesting.
Right. So Morgan Stanley acquired Eaton Vance and then started changing their mutual funds into ETFs. And it's a captive system where it works. We did a conversion for our client Gotham. They had a long short fund that in 2022 was up a lot, but people don't like to hold long short and things that have a short bias. They like to trade it. Converting that to an ETF makes perfect sense. And we were successful in doing it.
So last question, what are the key trends and themes that you are watching for 2025?
Wow. I think 2025, we're going to see just a lot of things that have historically been in structured desk, in banks that they would put into notes. Things like what Innovator has done with buffers, things like we're doing with Yield Max or with Battle Shares or with Stacked or Return Stacked, all these various more complex structures. We're now figuring out ways to retrofit them to the laws and the regulations and take them out of the dark, deep holes of banks and put them out in the transparent retail world where people who want to do these things can profit from them and make investment decisions using them. I think we're going to see just this wave of interesting, complex product. Number two, I think you're going to see more and more people focus on tax, right? And ways to use the ETF structure to do things better with taxes, the 351s, the various different ways of doing return of capital versus traditional dividend. I think that will stay in focus, and I think there's a lot of innovation that can come there. I think we're going to see multiple derivatives of crypto product, right? We have one filed for a client that's a combination of Bitcoin and carbon futures, kind of offsetting the story, but it also is interesting because they're not fully correlated. The Bitcoin gold one that I mentioned earlier, I just think there's going to be lots of derivatives of the crypto industry put into the ETF wrappers. So I wouldn't be surprised if themes make a comeback, right? They've really suffered for the last couple of years. But when you have like an excited market, people get exciting about themes again. We did chat with Roundhill as a client about a year ago. That's one of the few thematics that we've seen success in. Our first thematic was block, and it still continues to be the market leader and have great performance. So I would like to see themes make a comeback.
Exciting times for the ETF industry. We'll have to leave it there, but thank you so much for joining us today and for sharing your insights. Really enjoyed the conversation.
Thank you, Nina. And if any of your listeners out there want to launch an ETF, come find us at Tidal. We make it easy.
Sure.
Yeah.
That was Mike Venuto of Tidal Financial Group. Let's quickly recap some of the ETF tickers that we discussed today. So he talked about MSTX, which is the leveraged ETF on MicroStrategy stock. He talked about CHAT ETF, CHAT. It is the Roundhill Generative AI and Technology ETF. Then he also talked about TSLY Option Income Strategy ETF by Yield Max. The ticker symbol again is TSLY. And then we also talked a little bit about these congressional trading ETFs by Unusual Whales. So for Democratic trading, the ticker symbol is NANC, NANC. And for Republican trading, the ticker symbol is KRUZ, KRUZ. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcast. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.